Can you play the piano?
My wife can. We got a couple of pianos, actually.
That's something I really wish I could do.
My daughter's getting down on it right now.
Oh, really?
Yeah, the 8-year-old. She's jamming. And actually, my sister-in-law is pretty good with the piano.
Really?
Yeah, she can play they'll get down. I've always had this vision of coming down the stairs as your wife plays the piano and you're just got your coffee in the morning in the room. I always figured it would be really nice, you know?
I think the husband's supposed to play the piano.
I think so, but whatever, dude. I mean, I can't. So look at these fingers. These are wide hands and short, stubby fingers.
It's your dream.
I can. Is it the most I've got at? That was kind of a little. I think it'd be nice. The Halloween theme song. I did get that one down.
Really?
Yeah, the Michael Myers theme song, dude. It was only a few keys, so it's yeah. Dun, 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 yeah.
I always learn something new about you, Casey.
That's true. Me too, though. Do I?
We're a mess. Let's jump into it.
Well, back-to-back episodes a day, only to bring you guys some great information.
Yeah, we're wanting to put together a little conversation specifically about veteran loans. So whether you're in the industry or you're a home buyer that's just listening to the podcast or watching our content, there are a lot of myths about the VA loan that makes the overall reputation of it unfortunate and not as competitive as, say, a conventional loan. So we actually want to share some success stories, tips, tricks, and approaches that can help you get your offer accepted straight from the horse's mouth.
For sure. And we're giving it to you live on our MLO show.
We're trying to talk to that beat. It's really hard because
I like that. I like the beat that gets you there. But really, guys, as Addy always puts it, this is where we want to give you guys that transparent information to anyone in the home buying or refinance process, or if you're in the industry and you're industry folks. We're just here to try to talk the lingo with you and give it to you, though, from a real aspect.
Yeah. So if you haven't listened to any of our other episodes, we do have some great VA basics that we cover, but Casey himself is a veteran, producer Josh is a veteran. It's an important honor to me to properly represent veterans who have earned the ability to utilize what's called a VA loan. So this loan product is one of my favorite because it has very reduced fees, very reduced interest rates. There is zero mortgage insurance on a monthly payment standpoint, regardless of the down payment. And there's an option if the veteran qualifies to go 0% down. So that is a very appealing loan program for a veteran who served our country to take advantage of, right, Casey?
Yeah, and they serve the country. We serve the country, right? So it's our right to have that benefit for us, for that home loan product. And I think a lot of myths and stuff like we'll get into have just come across and, maybe worried people away from accepting that offer, or maybe veterans of actually using that benefit and maybe going with a different home loan product. And we're just here to tell you guys that, it's not always the case. Having someone there to represent you properly, and especially step forward and maybe have those conversations early with all parties to get that offer accepted. That's a real possibility in this market today. And me and Addy, it's something that's close to our heart, because veterans deserve and have done everything to have that VA benefit home loan and to use that to purchase a home.
Yeah.
Right?
Oh, absolutely. And I want to say just right off the jump is we got to look at it from the seller's perspective.
Explain the market, the situation.
So what's going on right now is, nationally, we say this all the time. It's very competitive, multiple offers, 10, 20, 30 offers, depending on the desirability of the property.
Yeah.
So the way the seller is looking at it, right, the person selling the home, working with a listing agent, is when you have that many offers, it just starts with the high end, right? The high end price are the first ones they typically look at. And then it wheedles down to the details. What type of loan product is it? Now, usually from the seller's perspective, a cash is number one. Cash is king, right?
Yep.
However, cash offers aren't always the highest, so it might not be considered or make it to the final three or, top
Sometimes
five.
they might be lower than what the list price. Yeah, financing, right? So, yeah.
So then the next desirable one would be a conventional one, which is the most common, clean, clear-cut guidelines, typically higher credit score requirements for those loans, higher down payment for most scenarios. So conventional is the easiest financeable process, generally speaking, for the sellers. The least amount of risk that this deal is going to fall apart, someone's going to back up, there's going to be back out, or there's going to be credit or income issues. That is the assumption that the sellers make, and listing agents also typically will explain it like that. Now, within conventional loans, the stacking order of most appealing is then down payment. So say you have 3 conventionals, the 20% down payment is assumed that they're a more qualified buyer than the 10% down, then the 5% down, then the 3% down. And these are all conventional loans. Now, does it make it true? Absolutely not. And I'll give you a quick example. When my wife and I listed our investment property, I think I might have mentioned this a couple episodes ago, but we had multiple conventional offers all at the same down payment. And one of the 3 actually had more assets than the other 2, had more stability. But from the seller's perspective, you just assume like, oh, this person's better than this person or that. It's not true,
right.
But it's an assumption
from the offers presented because you're looking at paper.
And I know we like beat the rug quite a bit about utilizing a good team, an agent that's going to go at bat for you and a lender that's going to call. But that goes to my lender piece, that how important it is for the lender to call and attest to the integrity of the pre-approval, which gets included in the offer. And I'm going to talk about our clients within reason. I'm not going to give them your social security number, but
right.
I'll
give all the information.
Right. So just explaining that conventional side, if they're staring at a conventional, 5 conventional loans at a very varied difference down payment, super clean, and then they look at a VA loan, all they're looking at is paper. They're not taking it personally. They see 0 down.
Mm-hmm.
The association is they have no money. They don't have very good credit. We've done plenty of VA loans with people that have $500,000 liquid and perfect credit scores. Yep. However, people who have that kind of money are also very savvy and like to diversify their investments. But once again,
on paper,
the seller is just looking at paper, and those are the assumptions they make.
Because guys, they might not be putting that money down because they have that option for that VA home loan benefit to put 0 down. So it's like they have the $500,000 liquid, like Addy's saying, and they want to keep that on hand. They want to maybe use that in other investments, keep it as savings, whatever. They don't want to put that into the house. And that's totally fine because their VA home loan option gives them that benefit. But on paper, that seller is just looking at someone putting 0 down.
I'm going to crack a soda.
Yeah, crack it. No, it's good. And so you got these other ones that's like 5 conventional offers, 3%, 5%, 10%, 20%, and a VA at 0. Quick reaction is probably go 20% conventional offer, whereas that might be all that person's assets, everything they got all thrown into it. We're putting it all into our down payment. Whereas the other offers might have more liquid. If something comes up, they can tap into the funds they have, whatever they need. They're actually could be stronger buyers than what is just on paper.
Absolutely.
Right.
Well, and so to slide into actionable takeaways, if you are competing and trying to utilize a VA loan, it's important to work with your loan officer and communicate every dollar of assets you have.
Yeah.
And what I mean by that, you got retirement income, IRA, stock, bonds, savings account, 1, 2, 3, 4, 5, 6, anything that could qualify to demonstrate higher assets, I want to see and I want to have in your digital file. And then also I want us to look at adding those assets in when presenting an offer. So one way you can do it is give your lender approval to speak about those accounts and those assets. And they call the listing agent and they say, hey, look, I know our offer says 0% down, right? But my client has actually given us approval to share screen grabs or PDFs of account balances. And it really helps. Now, of course, you black out like the sensitive information.
Right.
But send
I like that
over
approach.
to demonstrate it. It's no different, right? It's no different than a cash buyer that has to prove their ability to pay in cash. It is very common for, say, multi-million-dollar properties, even putting, $250,000 to $500,000 down payment for listing agents to require proof of down payment for that big of a down. So it's all about the perspective of the seller. If you're able to do that, do it. Another option, say you're going to do, we just did this on one of my loans.
Yeah.
VA loans accepted offer, listed at $700K, right? We went in at $775. It was top, very desirable location in the Portland metro, right? We had $50,000 liquid for a down payment, and then we had another $100,000 in mixed retirement, IRA, savings, stocks, investments. We structured the offer to be $50,000 down payment, buyer covering all of the closing costs, and then also to even sweeten the deal, we had a appraisal gap guarantee.
Nice.
So our appraisal gap guarantee was $25,000, meaning if the home under appraised for $25,000 from the agreed upon sales price, my clients would pay the sellers that $25K cap. So they put a cap on what they were willing to mix. Now, this is pretty complicated structure. Now, you as a loan officer and a veteran just need to know, what is my worst case and best case here?
Yeah.
Right. Worst case, I got to give 25 grand to the sellers, but I got to restructure my financing. You can reduce your down payment in that situation. Our clients were planning to do 50. They knew that if they had to pay that $25,000 appraisal gap, they would simply just reduce their original $50,000 they were going to put down to 25. Same money out of pocket, right? But the difference, what ended up happening, was we had a full appraisal, $775, bingo, Django, love it.
Nice.
Right? They actually moved the financing to $0 down. We completed a $775,000 VA jumbo loan with the only cost is the borrower's paying their closing costs and prepaids, which is about $11,000. Awesome. That is how you do it. So if you are presenting offers, you want to present a full push in of the chips on the poker table. Yeah. This is everything. You're going all in, right? Not like, oh, this is what I'm going to do if everything goes my way, $0 down. You're just going to get washed away. But if you structure your offer to put in chips all forward, and you can't lie, that's against the law. You can only offer what your ability to do financially and verified. But put it all in. Put your best foot forward. Have your agent, have your lender call, tell the story, and then at that point, the conversation usually goes to the myths come out. You've got the listing agent's attention. Oh, wow, this is a really good offer. Yeah. Okay, so what about VA? It happens. I've had these conversations all year long, and you feel the turn there. They're interested. So then they go into the appraisal. So here's my script on the appraisal, because that is another myth where people think it is impossible to close a VA loan because VAs have their own appraisal. That is so 2001. Not true. VA has improved their appraisal flow dramatically, Casey. So the quick understanding is, in order for an appraiser to do a VA appraisal, they need to be certified. Now, the difference between a conventional or any other loan product is typically it's going to be ordered through an appraisal management company, and anyone can do them and whatever. Right now, there is so much demand. That style of appraisal ordering is very backed up. But here's the twist. VA runs their own appraisal department. They run it. I mean, on the West Coast, the headquarters in Denver, Colorado. I've called the guy. They have mandatory turn times, just like military. Like, it's due here, the no if and or buts about it. And actually, coincidentally, I'm seeing VA loans come back quicker in most counties than conventional right now. So I can turn in a conversation, a negative, a myth that it's slow, Two, it's not slow. It's all relative to what the market conditions are right now. My VA loans are coming back quicker than conventional right now.
Yeah. Yeah. And they have these designated turn times, like Addy's saying, like once you as this lender submit this VA appraisal order, right, it goes into their system, it's picked up, and then it is a requirement for them that this is due, whatever that is, 2 weeks from that point, whatever their timing is on that appraisal. And like, that's what people get misunderstood. Like, hey, it can be out there. There's only so many VA appraisers that are licensed to do it. So like, it could be, a month or 2 months or whatever. That's not the case, guys, because once it is picked up, there is a mandatory due date of time frame that they have to have that report completed by and back in. And that's just the facts.
That is the facts. I would also like to note, too,
Nice.
Know the difference between VA, I call it a VA standard loan amount, and then a VA jumbo.
Oh, yeah. Big one.
So VA is opened up where, like, if you qualify on the VA guidelines, you can borrow whatever you want as long as you got enough income and the credit and all that stuff, which is a huge advantage. However, note to where you are in the country of what your maximum conventional loan amount is, because here in the Pacific Northwest, max conventional loan amounts are 548,250. I round down to 548K right there, right? If I go over it, it becomes a jumbo loan. If I borrow more than that, it goes portfolio lending. It's private. It's not standardized conventional guidelines.
Even by $1.
Even by $1. There's no,
There is no, if you go 548,251.
Yeah.
Jumbo loan.
So in VA, even though there's no cap, there are specific changes when you cross over into the loan amount exceeding 548. Typically, and it depends which mortgage company you work for, but you're typically going to see a lower debt to income ratio, meaning what you can get approved for is going to be less of a percentage relative to your income and debt liabilities. So just note that changes. Secondly, different mortgage companies have different minimum credit scores. So those are going to be a little bit higher on a VA jumbo loan. Lastly, any jumbo product is likely going to want to see some post-close reserves, so some additional savings. They don't want you to drain the whole trough and be out to dry. So I think that's a long-winded way to just be like, I try to explain that because it's super common right now with where average household incomes are.
Yeah.
Hitting out here, I think it's 90 to 100K household average income. It's really easy with low interest rates, pretty high income for someone to get approved for the maximum 548 right now. If you're making six figures and you're not out of control driving a $2,000 a month Tesla payment and 100K student loans, but if you're low debt, decent income, you're going to hit that 548 max pretty easily. So that comes up a lot in our market for the 500 to 600 most desirable price point.
Yeah.
So you do need to know that difference, because you can be blindsided. Be like, oh yeah, you're approved for up to 800K, but that mortgage professional doesn't know the VA jumbo specific guidelines for their company.
For sure.
You don't want to get into
And
that.
when Addy's like mentioned the reserves guys on, VA's requiring it, or even, on jumbos in particular, what he's meaning that is that's your full monthly payment. So like the principal and interest, the property taxes, the home insurance, the full monthly payment times however months of reserves required. 2 months times 2, 6 months times 6, 12 months times 12. They go up to sometimes 18 or 24 months, guys. And that is money that is not being used in the transaction, money that we have to show, lending has to show that you have in savings, investments, retirement accounts, additional funds not being put towards the transaction, right? So for anyone listening out there, and especially all my vets out there, if you're buying those bigger price points, right, you have to put that money down. You might in your mind say, hey, yeah, we have all this money right here. We could afford it. It's all there. But in some of those loans, you got to show additional money that we're not using. So that's something you need to be prepared for, because we have seen that several times make a deal not work out for someone because they got to save a little bit more till they're there. And again, that is your full monthly payment times whatever reserve requirement that would be. And you're typically going to see these for any loans above that conforming loan limit.
Require that.
Yeah.
Yeah, that's well said, Casey. And to note too, on because I had said stocks, investments, 401 IRA, all those accounts, you usually get about 75% vested balance.
Haircut.
So it's not 100%
Right.
of your 401k or your IRA. So just note that there's about a 25%.
And some actually will be there'll be non-liquid and liquid requirements as well.
Yeah.
Which is interesting.
Yeah.
You might see it be have to be liquid. So these are all just
company to company. You got
good things, to know, guys, for sure.
But back to the offer thing, because we were telling the story.
Yeah, because it's a tough market.
Huge, and I don't know why I'm just reiterating this so much, but the lender can really make a huge difference by having that conversation and overcoming any sort of thing. The Tidewater Act, which the VA loan has, where if something's going to be underappraised, the appraiser is required to present an open discussion, if you will. Simply put,
one of the only loans that have that, right?
The only one, yeah.
The only one, meaning they would call that listing agent. And the appraiser would call that listing agent to let them know, hey, this thing is coming in undervalued.
No, we can't find justifying comps. But
do you have any? Do you have any? Can you help provide? Give that. No other program does that, guys. That's an amazing benefit to have as a listing agent selling a home, knowing that, hey, you could provide the additional comps to justify the purchase price.
Absolutely. It's huge. I mean,
I don't know why I'm always like touching out on the table.
I mean, we're expressive individuals.
Yeah, we are.
But we just had a really great success story. Purple Heart family. It was a 450 listing, which is ultra competitive in our market, that 450 listing.
Mm-hmm.
Highest offer was 492. The best we could put our foots forward was 477. And we went full court press with the team, the agent, myself. I actually physically went to the house and walked it with our clients. Like, this is how special this family was to me. And we were not the highest bidder. However, because we reached out, because we took note and made those calls, it was a Friday night at 8:00. Calling that listing agent and following up with the text, explaining the Tidewater Act, putting our best foot forward and the story. It made a difference, and they accepted the offer, and we proceeded.
Yeah,
I mean, that's
not
huge.
A lot, and absolutely almost no one's doing that, guys.
So if you're sitting there, like, say you're in the industry, say you're a mortgage professional, take those goods due, like, give. I always feel like my service back is helping the veterans. Because I didn't serve, but now it's my turn to do something in return.
Yeah.
And if you're an agent out there who maybe thinks that it's impossible to get VA loans into contract, please unsubscribe to that mindset and even give us a call. I don't care what part of the country you're in. I'll have that conversation with you and help coach up your team on how to better present offers and how to utilize your lender to get them into contract. And then if you're a veteran sitting on a pre-approval and wondering, oh my gosh, are we just not going to be able to get in the market because I had that email? They were very concerned. And I broke down the examples. No, you've earned this. We can do it. Here are some examples.
Mm-hmm.
We can totally do it.
Yeah. It's just such a powerful program to allow someone that opportunity, right? I mean, they deserve that. And it's disheartening a little bit. And me and Addy try to lead with education, right? There's just a lot of stuff and bad information out there that agents hang on to, or even home buyers hang on to, or whatever it is about the VA home loan program. And it's just not the case anymore, and a lot of loans just in general, guys, have gone through transitions. I mean, they've been lending money for, hundreds of years, right? So of course, rules and regulations and guidelines change. That changes across every program, not just VA programs. And so that's what we love about this and why we support our veterans so much, is because we're here to tell those honest truths, because I think there is a lot of misinformation out there, and that keeps a lot of veterans out of homes or opportunities to get homes, when really it's one of the best programs out there. It really is. I
have a closing chapter.
Hit it.
If you are listening to this or watching this and you're a veteran and you're going to utilize this approach, or a version of the approach we just talked about, do not partner with a big box brand. You need a local lender that's going to work for you in the evenings, answer their phone or texts on the weekend. It's not going to work from the big names, because what's going to happen is you'll get a pre-approval letter, and it's not going to be dialed in and focused, and there's going to be an app that you can download to where you as a consumer can just type in you know the date and request a pre-approval letter, and a robot sends it back to you, who an agent then puts it in. That process doesn't work. You need a human, you need a professional that's in the market that you're buying in. You need all those boxes to be checked off.
Oh yeah.
And when I say big box, and I'm not going to throw anyone under the bus, but here's my definition of big box. If you've seen a national commercial on TV or on radio or huge Google banner ads, that's a big box. Those individuals aren't going to have the bandwidth to give you the attention and required need of energy to get you into contract into that program. And I say that with wholehearted respect, but with the intention of trying to help everyone out there. Yeah,
guys. And take it from me and Addy, we've worked at multiple lending locations and seen the different avenues and different platforms of lending. And truthfully, you know, the hours are just different in the way they're worked. And honestly, this is not a market where you cannot be getting your answers. You cannot have someone communicating for you. You cannot have someone reaching out and putting your best foot forward for you, because this is a very low inventory market. It's different than what we've seen in a long time in real estate, and you need that full team there to support you, especially if it's a different loan, you know, or you know, it's a VA loan, really, because you need that team and support, because it's a great loan, and people need to know that.
Absolutely. And if you're out there, and just to slide this into a conclusion, if there's anything we can do to help you, like, we've got that VIP number.
Yeah, we do.
And that number is 503.
Oh, 847. I almost hit with the last digits. That would have been a first in a few episodes.
9038. So yeah, hit us up on that line. Even shoot us a DM. I'm on Instagram. Casey's on Instagram. I'm even on TikTok. I'm throwing that out there. I should throw that out at the beginning, because I think a lot of people would tune out like right here. They're not hearing my find me on social.
You got to find it on social, guys, because we would love some reviews.
You would like, yeah, we could really use the reviews. That's always helpful. But if you're wanting to digest, like, I take all these episodes on my short form video content like TikTok and Instagram, and they're all talking points from these episodes.
Yeah.
So if you ever need a refresher, a video cliff note, find us on social. We got it.
Heck yeah. You want to sit through the whole half-hour episode. We get it. You just want to check it out on the 1 minute little, you know, quick short. Got to get us on that TikTok.
I love it. Well, thanks for being here, Case.
Absolutely, guys. Thanks for listening on all the platforms. Please subscribe. Please like. Please comment. Shoot us some reviews. If you're watching us on television, you know, late night, we appreciate that too on these local cable television shows.
Give a free mug to anyone that can prove they're watching us on local TV.
Take that picture, dude. We'll shoot that free mug over to you.
All right, guys. Well, that was everything we had to get your offer accepted in the VA world of things, or at least a strategy of sorts. So we thank you all for watching or listening. And until next time,